Let's move on and bring on the management of stovekraft. They reported their numbers, strong expansion in terms of the margins. Will that continue is what we're going to find out from Rajendra Gandhi, MD at stovekraft. Thank you so much, Mr. Gandhi, for joining in with us this morning on ET Now. Let's start by talking about the double-digit growth that you've seen this time. How was the demand trend, and how was the demand trend specifically in Tier 2, Tier 3 cities?
Demand continues to be soft. Our growth is driven by a lot of new product introductions and channel expansion. And we continue to see the same kind of demand that was there in the last quarter. We continue to be at the same level. But we believe that post the second quarter, between the middle of second quarter and the third quarter, the demand should come back, and that should spiral the future growth for us.
Right, morning, your margins have seen strong expansion year on year. Do you think that 7 to 8% in terms of margins look sustainable for FY25 as well?
We have corrected our gross margins. We compared to the last year from almost 4%, we have improved on our gross margins. And as the revenue growth, along with this gross margin growth, will definitely flow to the margins, that is the EBITDA. And we believe we can definitely be better than what we currently are at.
Volume growth the company has seen, and what's the outlook for the full year?
So we have a very good volume growth for the last year. It is closer to 20%, between 19 and 20% on volume growth. Of course, the value growth, as you know, the numbers, it is about around 6%. And we believe that volume will continue to grow even over the base that we have established last year. Because I hope most part of the year we have seen very soft demand overall in the market. But as this demand comes back with all these initiatives of new products and the additional channels that we are doing, we are very confident of a good volume growth over the normal value growth that we would want. We are confident of for this coming year.
Right. What we're seeing is while Q4 was strong, the growth rate overall for FY24, that was weaker than what we've seen in the last couple of years. What is the rate at which you're expecting to grow in FY25?
There are two factors to this. One is there was an input cost. I can say there was improvement on our input cost, which was as a company, as a policy that we follow, we pass on the benefits. So during the early parts of last year, we had high input costs, which were passed on to the consumers during the first 3 quarters. And the correction on input costs had started at the last quarter of last year. And so there was not much of value correction. And so the volume growth and the value growth was almost in line. Also, the last quarter of last year was not a great quarter. This was not normal business for us. We had a negative quarter in the last year's last quarter. So I think this is a normal quarter, what we had. And you are seeing a little differential high growth. But historically, we have been growing at about 19% CAGR. And we believe that with the initiatives that the companies and the business plans that we have, we can continue to grow at the same pace.
And any new segments or product launches that the company is looking at?
Yeah, we operate in majorly 3 categories: cookware, appliances, and the cooktop. In the appliances category, we have brought in several products which we have also indigenized, which otherwise we were importing in the past, and we did not have the advantage, and it was in line with what the peers or the competitors were doing. We have a huge advantage in these products now that we manufacture here. We are able to give the consumers better products at better price points, and which is aiding huge growth. We are witnessing good growth on our appliances category. In the cookware also, there is a little shift there. We were only in one segment, that is the non-stick cookware. We have now started working on our cast iron cookware. This is also giving us huge growth.
What are the store opening plans that the company has?
At the end of March 2024, we had 171 was the count. And we continue to expand at a rate of about 25 to 30 stores a quarter. the new geographies, because the majority of these stores are in the south. We had already started doing new stores in Delhi NCR region. We continue to expand this region, including the Chandigarh region. And we have started signing up new stores in Gujarat, that is Ahmedabad and the rest of us. So the new expansion in the west will start with Ahmedabad, Gujarat.
Okay, Mr. Gandhi, thank you so much for joining in with us this morning on ET Now. That was the management of stovekraft talking about how demand trends will start improving in Q2 and Q3 of FY25. Maybe some subduedness is what one could see in Q1 FY25 from the company even this quarter.
If you like this video, then like, share and subscribe to ET Now.